Hi, I'm James Robinson, and this is my stock pick of the week. So those of you who've been following me or have subscribed know that I've got an investment portfolio of $150,000, that I give you advice on stocks you should buy, and that I am also buying and selling those same stocks and holding them in my portfolio. And that way I'm able to track the results that I'm able to get and that you would be able to get if you took my advice. So every 6 months I do a review on where we are in terms of the portfolio. And so that's where we are. At the end of June was 6 months into the year. This is our 6-month review for 2020. Before I go any further, one of the things that I want to make clear is that I post every trade that I make exactly when I make it, at the price that I made it, in real time on Twitter. So I don't always get a chance to make a video in real time when I buy or sell a stock, but I always post it on Twitter. And so every single trade that you see here, everything that I've talked about that I've done, has been on Twitter and is documented there, so there's no question that my results are legitimate. So if you want to know in the future what my trades are when they're happening in real time, best place to do that is to follow me on Twitter. My handle is @RobinsonStocks. So again, to recap, on January 1, I started the portfolio with a value of $150,000. My goal is to outperform the S&P 500. So January 1, the S&P 500 was at $3,230.87. As of June 30th, the portfolio was at $3,100.29. So for the first 6 months of the year, the S&P 500 was down 4.04%. During that same time, my portfolio was down 1.49%. So while I was down slightly, I did manage to outperform the S&P 500 by 2.5%. Having said that, I think a lot of my results could probably be chalked up to luck. The last 6 months have been extremely turbulent, mostly due to the COVID-19 experience. At the lowest point this year, I was down about 30% for the year. At my highest point, I was up 7% for the year. The value of the portfolio, therefore, over a 6-month period has roller coastered 37%. That's a fantastic amount of roller coastering, and the fact that we've managed to end up just about even after all that we've been through in the last 6 months and the incredible turbulence, I think that's a victory. I think that shows that we're very conservatively invested, that we don't take a lot of risks. None of our companies went bankrupt, but a lot of our companies were down 20, 30, and 40% at the peak. I think a lot of that was panic, and we managed to buy some things that were very, very cheap that doubled and tripled over a very short period of time because we bought them, and that sort of saved our results. But just to recognize, I was actually trailing the S&P 500 for most of the first 6 months of the year, and at one point I was trailing it by 11%. So take these things with a grain of salt. I'd love to tell you that I'm a genius investor and I never screw up and I never am trailing the market, but that's not true. And if you watch the videos that we posted the first half of the year, I was lamenting often that I just was trailing the S&P and couldn't seem to catch them. I have caught them and I've been ahead of them for the last 60 or 70 days, but not by a huge margin. So just to let you know how drastic the changes that I made as a result of the COVID are, these are the stocks that I owned at the January 1st. I owned Gilead, Waddell & Reed, Robert Half, LyondellBasell, Disney, Warner Enterprises, Altria, MSC, Industrial Supply, The Children's Place, Snap-on, Waco Group, and H&R Block. So those are the stocks that we owned January 1. And if you've been following me, I tend to own stocks for some significant period of time, oftentimes for a very long period of time. And the amazing thing is I don't own any of those stocks today. I've sold out of every single one of those positions. Of the positions I sold out, I think I have, of those 11 stocks and the other stocks that I had one more stock that was a loser than a winner. So I think I had 11, I've sold out of 23 positions, these stocks and some other stocks that I bought this year. And some stocks that I bought multiple times. So I bought Altria at a couple different times. So I consider that 2 positions, even though it's the same company. And I basically had 12 losers and 13 winners. 13 losers and 12 winners of those positions. I just happened to have a couple of positions that were very large winners that made up for a lot of that. The Children's Place tripled, and another stock we're going to talk about in a minute managed to double. So, but again, the idea that I would sell out of all of these positions in a 6-month period, I would never have predicted January 1 that would happen. So today, these are the stocks that I own. Paychex, Ventas, T. Rowe Price, BlackRock, and SEI, which is a securities company. So I wanted to talk about why I've made this dramatic change in my portfolio. The first thing is that the stocks that I owned before were solid companies at a very good price. They were opportunistic buys. They weren't the best of the companies that I looked at. To be clear, I've looked at about 925 companies, and I've got about 180 of those that at the right price I would buy. A lot of those companies were sort of lower in the list of 180. They were towards the bottom than the top. But when COVID hit, everything in the market got really dramatically slashed. And as a result, I was able to buy what I consider to be fantastic companies at what I consider to be really, really good prices. And so what I've done is I've just jettisoned all those companies that were good companies but not great, that were opportunistic. And I've said, you know what? I'd rather own these companies for the very, very long term. And so I would be very surprised if I didn't own these stocks, 5 years from now. I've been waiting for a long time for the opportunity to buy these companies. And now that it's come up, I'm not going to let them go. I'm not going to take a 15% return or 15 or 20% profit and cash my chips in like I often do, because I really look at these as being very, very long-term plays. So one of the things that I'm not happy with is the lack of balance in the portfolio. So I only own 5 stocks, and those stocks aren't very evenly spread. And so I do plan on adding to the positions and trying to get these stocks to the point where they're all relatively equal. But I have to wait till I get a price that I like to do that. And it may not happen. It may be that this is where I end up. But if the market turns, which I believe it's going to, we're going to talk about that in the next slide, then I'll be trying to add to these positions and trying to get it so that these companies are all basically the same size in terms of 20% of my portfolio each kind of thing. This, however, should be the more telling slide about what's happened this year. I'm 73.9% cash. So those few stocks that I own make up a small percentage of my portfolio. I believe that the market is going to have a very rough second half of the year, and I'm prepared to be 75% cash for the next 6 months if I have to be. I don't think this thing is going to turn around as quickly as the pundits do. I think the fact that the market is trading effectively where it was, in March 1st is inconceivable. The idea that our economy hasn't been battered and the price of companies hasn't dramatically reduced, I think makes no sense. And so I'm basically waiting for buying opportunities, and I'm waiting to really believe the market has recognized the situation we're in and has dropped significantly. So that's why you haven't seen me make, and you probably won't see me make, a lot of suggestions that you should buy stocks in the next 30 to 60 days unless there's a big change. I'm simply waiting, kind of like Warren Buffett. I believe there's going to be great opportunities, but I don't believe they're out there today. And so we're sitting there with lots of cash and continuing. By the way, I want you to know, one of the things that I do when I'm all in cash, I don't have anything to think about, I continue to research new companies all the time and try and add to that list of companies that I can speak intelligently about. And that way, when the big change comes, I'm fully prepared and ready to act on it. However, by way of reporting, you should see that we've done very well on these companies that we bought. So all of these companies we bought after March 23rd, so after sort of the market had collapsed while it was still in free fall, or when it had sort of reached bottom. You can see that we bought more SEI investments on the March 2nd, March 23rd. We bought Paychex on the 30th. We bought Ventas on the 25th. And then BlackRock and T. Rowe Price we bought in mid and late April. But look how we've done with these stocks. We're up 29% effectively on SEIC. We're up 27% on Paychex. We're up 85% on Ventas, up 17% on BlackRock, and we're up about 10% on T. Rowe. And I have no intention of selling any of these, even Ventas, which is up 85%, I plan on keeping for the very long term. So that's a lot different. A lot of you have seen me consistently buying stocks. They go up 15 or 20%, and I sell them and go find something else to buy. Even though there are things that I could justify buying right now, I don't want to buy anything until I think this thing has dropped dramatically. So a totally different portfolio than I would have predicted I would have at this time of year. I've got lots and lots of ammo and ready to buy things when the time comes. I've got about 25% of my portfolio, 27% of my portfolio invested in fantastic companies that I'm really, really happy I have a chance to own. I'd like to get 40% of my company into these, 40% of my portfolio into these 5 companies. But again, I need the market to help me out before I'm going to do that. So that's my summation. That's where we are 6 months into the year. We're down very, very marginally for the year. I think we'll still have a profitable year going forward. That's all I got. Thank you very much.